Welcome back to the Owner Seat Podcast, where operators get the truth about what's coming next in fitness and wellness and what it means for growth, margins, and survival. Today's guest is Nate Scott, Chief Financial Officer of Solidcore, one of my favorite brands, one of the most intense, talked about boutique fitness brands in the United States. Nate is a strategic, operationally oriented CFO with over 20 years across finance, consulting, and leadership roles, including CFO and COO seats in high growth businesses before stepping into Solidcore. What makes this conversation different? We're not going into the Pilates boo. Yes, it's hot. Everyone's talking about it, and Solidcore is at the top of that list. We're going to talk shop. We're going to talk the real operators about what it takes to scale a premium boutique concept while private equity is involved, expectations are higher, and the unit economics have to hold up under scrutiny. Solidcore has been at the center of the investor spotlight, so the questions become, what do buyers actually pressure test in boutique fitness? What does scalable finance and ops infrastructure look like when you're building past 100 plus locations? And how do you keep the brand premium while protecting margin, cash, that's that's our favorite, and execution? And for context, Solidcore's mission is to change people to seek their strongest self, and their vision is to become a true category of one. Nate, oh my goodness, I've been waiting for this moment. Welcome to the Owner Seat Podcast, sir.
Awesome. Yeah. Thank you, Albert, for having me on. Super excited for this conversation and looking forward to kind of diving into some of the details that we normally don't cover during other conversations. So yeah, really appreciate it.
Yeah, no, I'm so glad you were able to jump on. I know you're a busy man. There's a lot going on. I mean, Solidcore, again, top of the list. You all are crushing it. And I wanted to take the opportunity for those that get to tune in and watch, or maybe they're listening while driving or working out, they get to hear a couple finance guys just talking shop. And so I thought I'd start a little bit, just rewinding a little bit. You know, you've been a CFO and COO across multiple high growth businesses. What's the biggest scaling pattern you've seen repeat, no matter the industry?
Yeah. I mean, that's a good question. And I think, over my career, I've kind of put together my own playbook that I've done at, various private equity owned companies that I've come on board. And I think it really comes down to actually the basic three that we talk about. It's people, it's process, and it's technology. So it's about, assessing the needs of the business and where it's going to be in 2, 3, and 5 years, making sure that you have the right people on board before you need them, setting up your processes so that they will mature over time to where you're going. And of course, making sure that you've got the right infrastructure and technology, not for what you need today, but for where you're going to be in a couple of years. And if you do those things, I think you'll ease a lot of friction points as you grow moving forward.
I love that. PPT. I'm going to remember that. That's so good. You know, Solidcore, as I mentioned, it's doing so well, and you and the team are doing such a great job. Looking back, what made Solidcore worth the fight that you wanted to step into it back in 2021? It was, right?
Yeah, I mean, that's a great question. When I was looking at new opportunities, I'd been a CFO at a few different spots and had some successful exits. And so I knew what would kind of work and what wouldn't work. And so, after talking to, the Solidcore founder and Brian, our CEO, I really
Yeah.
knew that they were focused on getting the right people on the bus. They were, focused on finding the talent they needed to kind of be successful going forward. And they weren't afraid to invest to get that talent. And so, really after talking with Ann and after talking with Brian, I knew that they were kind of headed in the right direction. And, this was a business that I wanted to be a part of. On top of that, they had an amazing community, an amazing culture. And so when you combined all those things, it was, the right decision for me to come on board.
It's so good. And as you're growing, sometimes people don't realize the more you grow and the faster you grow as you're trying to scale, things tend to break. Some things that maybe we didn't plan for or get ahead of. So in your experience, what's the fastest way that you've seen boutique fitness breaks financially as it's scaling past, multiple, now you're getting into multiple dozens and dozens of studios?
Yeah, I think the biggest key is really around unit economics. You need to
Hmm.
build a business and you need to set up the structure of your business so that it works for good times and not so good times. You can't set things up where you've got to have 80% utilization, 90% utilization to be success. You need a business that's going to work even when you have 30% utilization or even 25% utilization, and so that you're not bleeding out cash. And so I think the biggest mistake I see is that founders have had some success in a couple units and they build out based on that success. And the reality is you want to have a lot more margin of safety when you do things. So you want to take on, less real estate than you really need. You want to
Right.
make sure that your staffing model is going to work even on lower volume. And so I think if you do those things, you're going to give yourself a lot more cushion, a lot more margin of safety as you grow. Because the reality is you can have the best plan, but it never goes exactly as planned. And things often take longer as you're figuring it out. And so you want to give yourself as much wiggle room there to get things right. So, yeah.
So good. I'm going to take that margin of safety. That's so good. What do you think, that you've been a part of different organizations, massive organizations. What's the CFO job? Like if you think about where you focus, where most operators underestimate, is that, as you were mentioning, the unit economics and getting that right? Is it the capital planning? Is it the reporting cadence? Is it the tech stack? Like what do you find that, most people don't realize, like when you're in the CFO seat, this is the tough part.
Yeah, I think I probably have a different answer than for you than I think a lot of folks. I think, a lot of the basics like, making sure your forecasting is good, making sure that you have
Mm.
a good solid cash forecast, you understand kind of the economics of the business. Those are really kind of the table stakes. I think what, the biggest separator for, a CFO that's great for a growing company is, can they attract talent? Can they hire the right people as you grow? The reality is, like, as you grow, it's all about getting the right people in the seat.
Yeah.
And so you need to be a leader that people want to work for, that people are going to trust. Because as you're growing, you want to bring on folks that are going to have to take a risk by coming on board with you. That's the kind of level of talent that you want to bring on board. And so you want to be a leader that, again, can bring on strong talent that people will trust. And I think that's probably the most underlooked kind of skill
Yeah.
for a CFO, particularly for a growth company.
Well, that's your first P, as you were mentioning earlier. People, talent is the most important. Who you casting and onboard it the correct way. You mentioned trust, and I always find it fascinating to see the dynamic between the CFO and the CEO. So you've been a part of multiple growth brands. What does that look like? Great CEO. What do great CEOs want from a CFO when you're in this type of ramping, hot growth brand? What do they not want?
Yeah, I think, the most important thing is you need to be a leader that's going to do what you say you're going to do,
Mhm.
that they can trust, and that's going to point out their blind spots. A great CEO and a good CEO is not going to want to have a CFO that's going to just tell them yes all the time. They're going
Right.
to want a CFO that's going to point out, where are the areas of risk, and what can they do to mitigate that risk. A CFO that's not necessarily a roadblock to moving forward, but sees an issue and comes up with a solution about how to move forward on that. And so I think that's one of the biggest things. The other thing as a CFO, you really need to kind of guard your integrity really, really carefully. And the reality is, like, integrity is one of those things that only you can give away. And so I
Right.
always say, as a CFO, you can never be scared of getting fired, right? When
Mhm.
you need to speak up, you have to speak up. You can't
Yeah.
be someone that holds back and says, I don't know if I should say that. And so to kind of put it simply, I say to be a great CFO, you can't be afraid to get fired.
Man, that's awesome. That's a huge takeaway. I love that. So I want to switch gears. You talked unit economics, and many of the listeners and viewers that are on this, they're running studios. They're running maybe a single unit or a multi-unit studio platform or portfolio. And they're trying to figure out, what can I do to actually drive profit? And so we talk a lot about that on this show. And so from your perspective, what are the true drivers to studio level profitability in a premium boutique model? Is that pricing? Is that utilization, staffing structure? Is that the real estate and occupancy costs? Like, what are your top 3 to 5 areas that you're looking for from a KPI or even pre-launch, pre-opening of a studio? That's typically where people mess up. They didn't get that right, and now they're stuck with it. Speaking of occupancy costs.
Yeah, I think it's a some great points there, and I think it initially starts with real estate, right? You only need as much real estate as you actually are going to use, and so you want to make sure that you're not taking on more space that only 5% of 10% of the customers are actually going to utilize. You're building out and you're sizing what you need based off of the 80% of clients that are be coming to see you. By starting with that, you're going to already set yourself up for a lot more success because
Right.
you're not paying extra rent that you're not being utilized. You're not investing in amenities that the majority of your client actually doesn't care about or is not worried about. And so I think by keeping things simple, starting with the real estate, that's going to help dramatically. I think another aspect that you have to utilize is earn the right to grow. Okay.
Mm,
So it's okay to have grand visions of people and the level of service that you want to provide when the studio is completely full. But, set up processes so that your studios can earn that right over time. They can earn the
yeah.
right for more staff at their particular location as they grow. I'd say another area that's really important is to incentivize your employees in studio. The reality is you want
Um,
them to share in your success. And so, you know, when a studio is half full versus completely full, the level of work for your people in studio isn't just twice as hard, it's like exponentially harder to deal with. And so you want to make sure that they have a share in the upside, whether that's, commissions on the memberships that they sell or, allowing them to earn more based off the utilization of their class.
mm. That's good. Those are 3 great points. Not only earning the right to grow, but making sure your real estate and you got the occupancy costs all modeled in in the correct fashion. Square footage is key. And then compensation plans, incentive structures, those are so important. Something sometimes we skip through. Those are so important. Probably as you're mentioning, not only the casting and onboarding and recruiting, but what is those incentive structures that are going to align with what you're trying to do, what the vision is to grow financially. Speaking of growing financially and keeping things healthy, walk me through what's your thoughts around a healthy contribution margin for the studio world? And what needs to be true operationally to hit that in your opinion?
Yeah, I mean, I think, the reality is in a boutique studio industry, somewhere kind of north of 30% is probably a
Yeah,
healthy contribution margin for a studio. We do, much greater than that. Um,
right.
Again, um, I think the key to that is, one, making sure that you understand what price you can actually
Mm,
charge your clients. I think two, making sure that you can consistently deliver the value and the experience that the client expects from what they're paying there. Um, and then three, I think finally, and we talked about it a little bit before, but just making sure that your employees share in your success. You want
yeah.
them to be just excited to grow as you are, and so I think that's an opportunity or an area where folks generally kind of miss it because the reality is as you expand, as you grow, you're not going to be able to be everywhere. Your employees are the ones that are going to be there, the front, the face of the brand to your clients, and you want them
Right.
just as excited to be part of that growth as you are.
You talked about pricing, and sometimes when I'm working with franchisors or franchisees, they do the hey, what's going on across the street type of pricing, competitive analysis. In general, I don't wanna give up the secrets of what Solidcore does, but any tools that you recommend or anything that you recommend to those listening and watching around just pricing, choosing your pricing models? Like, how can they go about and making sure they feel very confident that it's mathematically sound that they selected the right price other than the basic supply and demand? I guess you'll figure it out as the market will tell you, but leading into that, what would you recommend?
Yeah, I mean, I think I would say don't be afraid to start higher, and don't assume that you just have to match your competition. The reality
Right.
is your competition, may not be delivering the same experience that you are. They may not be delivering the
Good
same
point.
consistency that you are. They may not offer the same value and effectiveness of the workout that your workout does. And so, I think if you really focus on delivering the best value to the client, I always think of like price over value is like a framework I always have in my mind. What value are we getting and
Mm,
what value are we delivering based off of what we're either purchasing or providing? And so I think if you can focus on, making sure that your clients are happy, the experience is absolutely effective for them, you have less to worry about on pricing. And so you can charge that premium price because you're delivering a premium product.
I love that. Experience. It's so good value. So, as a CFO of Solidcore, as you wake up and once you plug in, what are those 3 metrics that you're just thinking about or you're looking at? Like, what walk me through, kind of let us see behind the scenes in your life as the CFO. What do you look at?
Yeah, I mean, that's a really important question. And I think there's a variety of different things that I look at every morning as my routine as I kind of settle into the office with my morning coffee to kind of see the state of the business. Three of the ones that I look at first. The first thing I look at is visits. And what were the visits like across our locations for our
Okay.
comp studios as well as our NSOs? This, gives me a great predictor of what our revenue is going to be that month. The next thing I look at is our cash sales. So what were our cash sales like? Were they as expected? And that will vary particularly for membership based companies because you're going to have certain times of the month that are much more heavier for your membership renewals, typically like the end of the month, the beginning of the month. But I look at our cash sales to make sure that that's in line with what I expect. And then finally, I look at our memberships. How are our memberships growing? We want to be growing our memberships every single day across all our regions. And so those are the first three KPIs that I look at every single morning, without a doubt. There's obviously more that I kind of dig into to see the health of the business, but those three are the ones that I really focus on.
Amazing. No, thanks for sharing. That's so good. I love to know what you're looking at, and I know many of us will now pivot and make sure we're following suit. That's so good. So I wanted to get into infrastructure and get your thoughts on that. There's a lot of brands out there, unfortunately, and I won't name them, but there's some large franchise systems that were hot. I mean, they were doing great, and they got into the public market and maybe oversold, maybe weren't doing the same things that they were doing earlier on in the process. It came down to a $2 stock and then they vanished, type of thing. So as you're getting over and crossing over that 100 mark, 200 mark, what do you feel like break first? Is that reporting? Is that people? Is that the processes we were talking about earlier? Is that the tech stack? Maybe we're not evolving enough to drive growth.
Yeah, I think there's probably a few things across that area. So, one, hopefully you do have the tech stack in place to support you, whether you have, 100, 200 units or 500 units. That's something you want to build, well in advance. The other aspect is on the people front. And so the route is as you scale and you go from, let's say, 50 units to 100 units, there's a process of you having to let go. And you can no longer be everywhere that you want to be. You can no longer know everything that you want to know. And you really have to trust your people. And so, in order to get to that spot and not have issues, you need to have built that talent early on, way ahead of the game of where you're at. And the reality is, if you can add trusted people earlier on that are going to be there to help you scale, and then you have the wherewithal to kind of let go and not micromanage them, the
Mm,
process is going to unfold a lot better there. And then lastly on process, process is something that constantly needs to mature. What worked for
mm,
you when you had 20 units versus 50 units versus 200
right.
units will constantly evolve. And you need to be thinking about where are the new friction points that you have in place. And you need to be making sure that you're leveraging technology as much as possible to not just necessarily automate things, but to compress and reduce friction point, utilizing,
Yeah.
tools like Alteryx or other technologies that are going to allow you to do things much, much faster than just one or two people kind of plowing through something.
I wanted to chat with you about that again, kind of pulling back the curtain a bit, and just I'm always fascinated to see what is everyone doing with their finance back office. And so I get the opportunity to talk to the CFO in the fitness and wellness space, the boutique space. So can you walk us through, I mean, speaking of innovation, like how are you all innovating? How are you creating that culture with your finance back office? And I'm thinking the close process, controls, governance, forecasting, unit reporting. Is there anything that you all are looking to do or that you're currently using that you can share, of course, that's making the finance department just pretty powerful for what you all are doing?
Yeah, I think, one of the things is we're never satisfied about where we're at. We're always looking for opportunities to improve, whether that's our close cycle, whether that's the precision of our forecasting. And we're not afraid to adopt new technologies that are going to help us get there. I think, one mistake that folks can often make as you're growing quickly is get too locked into a particular process or too locked into a technology that's not going to allow you to evolve over time. And so you absolutely want something that's going to be flexible growing forward. We're also, implementing, the use of AI as much as possible as far as like
Um,
how can we get to the right data and the right answers faster so that we can make improved decisions on that front. So, those are a few areas that we're really kind of focused on. But the reality is like it's never being satisfied. It's always trying to improve, whether it's again, you know, your monthly close process, how you process invoices, the efficiencies there, or your forecasting process. How can we always make that better? And I think encouraging that mindset of curiosity
mm,
throughout your finance and accounting organization when things don't go exactly as planned, you want them to be curious about why. And that's kind of a difficult thing to teach, but it's something that you want to continually encourage. And that's going to allow them to get better over time. Um,
that's so good. What curious on your approach and your team's approach around new studio pro formas. You mentioned real estate, and I'm thinking rent per square foot, your square footage in general. But what are the assumptions outside of that that are just for you non-negotiable? Like we have to get this down in order for this model to work.
Yeah, I think everyone's going to kind of be able to do a basic pro forma of where you think the business is going to go in a particular area. I think the biggest thing to get things right is to really understand what your potential visits will be in a location. And
Yeah.
I think everything starts with that. And to do that correctly, you really need to understand who your client is, not just from a relational standpoint, but from a data standpoint. What are the psychographics? What are the demographics that your
Mhm.
client particularly aligns to? And what is that density of that particular client in an area that you're looking to build out a studio? If you do that right, as well as some of the art of real estate and making sure that you have a good location, you got the right convenience and the right parking, you're going to be successful and going to be able to um, have a successful open. But the reality is, if you get that wrong, everything else is going to, fall apart from there. And so I think that's the key part of it as you're building out the pro forma, that confidence in your visits that you expect at a particular location. You should also be
Yeah.
modeling out, the reality is like life isn't about, one single decision that, is successful. It's really about probabilities. And so understanding in your
Mhm.
mind, like what are the probabilities that this unit is going to overperform? And what are the probabilities that this unit could underperform? And seeing where your risk tolerance is on that particular area. The reality is you don't want a location that you have to hit home runs every single day to be successful. You want a location that is going to be pushing success on its own, regardless of how well or perfectly you operate.
Yeah, you talked about that margin of safety earlier, and I love that. On the show, we talk a lot about scenario-based planning. It's making sure you have plan A through Z. You got to think about it all because you just never know what variable is just not going to come to fruition that you had mapped out on a spreadsheet. I'm curious. So one thing that we haven't chatted about, and actually I don't chat a lot about it on the show, and I don't get a lot of CFOs on the show. Actually, it's always operators. So this is awesome that people get to see kind of behind the scenes from a finance lens and your lens, sir. Resource management, capital allocation. So people don't realize, like in the CFO seat, there's marketing asking for money, operations asking for money. You got IT asking for money. So just walk us through behind the scenes, like how do you, as you're trying to protect cash and cash runway, think. I mean, Solidcore is expanding. There's a ton of build out, so there's a lot of cash going out. How do you protect against that? But then how do you make sure you're teaching the team that, a dollar isn't the same everywhere, looking at it from an ROI perspective.
Yeah, no, that's a really important question, right? Because your team is always going to want to do more. They're always going to want to lean into ideas that come up, particularly as you grow. And I
Right.
think there's a few key areas that are particularly important for for a growth company. One is you need to make sure that you have a rock solid cash forecast. You have to understand what cash you have at play and what cash you can invest in other areas of the business. I think the next area that you need to really be behind is making sure that your employees, that we'll kind of talk a little bit of ROI, but have an owner's mindset. They truly are
Mm,
thinking about their decisions and how it's going to be effective across the organization, not just their one particular silo. And so having that kind of owner's mindset is really, really critical. And then two, being very disciplined about thinking through what the ROI is going to be for a particular investment. And there's
yeah,
going to be some decisions that, it's very kind of cut and dry. So let's say paid media, right? We have a
right,
clear visibility of good data on, what our paid media spend can do and the ROI that it can generate for us. You're going to have other, decisions that are going to be a little bit squishier. So maybe it's a building event that you're looking to do, or it's an investment in the HR team that you may not see directly impact the top line revenue. But
right.
thinking through and making sure that you've got a clear picture of what that ROI is going to do, or what that investment is going to do for the organization across the board. And again, making sure that you have that clear kind of margin of safety. You don't want to be investing in things that, particularly when you're in growth mode and there's so many different opportunities around, you don't want to lose your discipline and invest in things that, there's maybe you're going to get a 1 or 2x return on it, or maybe you may not get a return on it at all. You want to make sure that you're constantly prioritizing, the areas of investment that are going to be generating those, much larger impacts
Yeah.
for you. And I think if you have a process of, prioritizing those decisions and prioritizing those investments, you'll be well on your way. I think where most folks can kind of fall down, particularly as they grow, is that, when you're outperforming your budget, you're outperforming your plan. There's a tendency for the plan to go out the window, and that you've got
Mm,
room to do X or you got room to do Y. But it really is kind of maintaining that discipline about decision making for your investments. So
yeah.
yeah.
Oh, it's so good. Ton of gems right there. Make sure to rewind that one, y'all. That's so good. So Pilates is exploding. We see it everywhere, and it's coming in its different varieties, which is really exciting. Not only the equipment and the reformer, but strength, and some are throwing cardio. I mean, there's dancing on the Pilates reformers now. I'm seeing it. I'm seeing everything. It's awesome. What do you where do you see that it's all going next? Like, what's the evolution look like? What do you, if you could predict in the next 2, 3, 5 years, like where is this all going? Obviously, solid core leading the way, but how do you make sure that continues? And then what does that look like? What doors are opening?
Yeah, I mean, I think the reality is there's a lot of competition coming into the market. Folks have seen the success that Solidcore's had. They've seen the success
Right.
of other Pilates studios, and they want to be a part of it. The reality is, if they don't take the time to really deliver the best experience, the most consistent experience, if they don't take the time to really understand their particular client, they may not be. They're more likely or not will not be successful. I think one of our keys to success is continually focused on the client experience, making sure that we deliver the most effective workout we consider on the planet. And that's a non negotiable for us as we
Yeah.
grow. I think we've also leaned into growth. We'll, open close to 40 studios in 2026, probably more
Wow.
than any other corporately owned boutique fitness concept out
Yeah.
there. That's a process that we've earned. We built the team that's capable of doing that. It's not something it's an expertise that we haven't done. We just flipped a switch on. It's an expertise that we built over years with our leadership team, with our studio development team, with our operations team. And so, we're at a stage to do that. I think if we look at, a couple years from now, you're going to see, again, more competition, but you're also going to see a lot more folks that didn't quite make it. And it's not because the
Right.
concept wasn't a great concept. It wasn't because folks fell out of favor with strength training. It was because they didn't deliver the best client experience and they weren't laser focused on doing that. So, yeah.
Yeah, I'm curious about that because I was going to ask you, where do you think people are getting it wrong? And one of the things I keep reading about, and it only makes sense because, well, look, Solid Core 40 plus a year. We have all these other brands that are popping in because they obviously saw, they smelled the profit in the water. So like, let's jump in. The one thing though that I know about Pilates is the certification process is intensive, especially if you want that great experience. You want the best people. Well, the certification process is tough. It's done for a reason. So what I'm reading and I'm seeing, and it just totally makes sense, is there's potentially a shortage of Pilates performers. How is Solidcore protecting against that?
Yeah, I mean, the reality is we have our own, proprietary machine that we manufacture. But I think the biggest edge for us and really the magic of Solidcore is our coaches. And so
Mhm.
we invest a lot of our coaches. I think we have probably the best pay in the industry
Yeah,
for our coaches. We also probably have one of the lowest coach churn of any company in our
amazing.
industry. And we're extremely proud of that. This week we're celebrating Coach Appreciation Week for the thousands of coaches that we have across the
Oh,
country. And so we know without a shadow of doubt, we would not be where we're at today without our coaches. And we're going to continue to invest in them. We're going to continue to prioritize them. And so that's one of the secrets of success for us. The reality is like the boutique industry, I don't look at it as a finite a scarcity market where only one of us can be successful. The reality is there's room for many of us to be
yeah,
successful.
love
And,
that.
the more success that we have, it's kind of all boats rise in a rising tide. This isn't kind of a zero sum game where, we should be kind of worried about can only one of us make it in the market. The reality is our biggest competition is probably the couch. And so, the boutique industry is unique in that really, I think 1 + 1 can equal 3 and 4. We can all have room for success, and our clients can get healthier. Our clients can get stronger. So, yeah.
So good. Well, thanks for sharing that. Well, I've really appreciated your time. I have one more question. I know you're super busy, and thank you for being on the show. But if you had a message for every boutique owner, franchisor, franchisee, a multi-unit operator that's listening and watching to this, and they're just trying to figure out and carve it out, how do I scale this? How do I grow? How do I expand? What's your best advice to them this week? Practical thing that they can go do this week, this month to gain some momentum there.
Yeah, I think the biggest thing is don't be afraid to invest to get the right people on the boat or get the right people on the bus. The reality is if you can invest in talent that is good for you today, but has also been where you're going in the future as far as scale, as far as level of complexity of operations, you're going to avoid a lot of pitfalls because you're leveraging folks that have been there and seen things before. I'd also say don't be discouraged or afraid of hiring folks from outside of the industry. The reality is, if at Solidcore, we've done that. We've fired folks from all over the industry, all different industries, the restaurant
Yeah,
industry. We've hired some folks, the boutique industry. I came from the tech world before coming over to Solidcore. And we were
yeah,
all able to kind of cherry pick and find the best experiences from our past and allow them to work and help Solidcore be successful. And so again, that would be the biggest piece of advice I'd give to folks that are looking to scale. Invest in talent and don't be afraid to do that.
I love it. Well, 40 plus in 2026 people, process, and tech. Nate, this has been so good. I'm a huge fan of Solid Core. I need to jump back in, get my workout in. My psoas needs it. I need it. It is a tough workout. You all do a great job. To your point, your coaches are phenomenal and always hearing great feedback from them on just how good the company culture is and how great they're taken care of. So great job. I could just totally tell you. You're getting it from the finance exec. We're talking about people, talent, and taking care of your team member experience. Nate, we didn't even chat about it. For those that are interested in wanting to become a franchisee, how can they learn more about SolidCore? And then how can they connect with you?
Yeah, absolutely. If you want to look or learn more about SolidCore, feel free to just check us out on our website, which is solidcore.co. I'm not as forward facing as our CEO, so you can reach me traditionally just via LinkedIn. But yeah, I look forward to connecting with you all and happy to answer any questions that you may have as a result of this conversation. So yeah.
I love it. And we talked a lot about ratios and unit economics. And as if people are tuning in for the first time or those that have been around for a little while, I know we're throwing stuff out there that you're constantly learning about. So any fitness or wellness operator who wants cash visibility, utilization modeling, we talked about scenario based modeling, and that's that safety measure, that area where or wiggle room so that you can have different variables. You can see it in different ways, pricing models and pricing structure, even capital planning. We talked resource allocation. Make sure to check me out at strategointel.com or reach out to me on LinkedIn. This has been another episode of the Owner Seat Podcast. As always, I'm your host, Albert Ramos. And if this is your first time tuning in, we release episodes every Monday and Friday at 8 a.m. Central. So this has been so good. Nate, thank you so much for your time and great job. Great job out there to your whole Solidcore team. Very impressive.
Yeah. Thank you very much for having me. It was a great conversation. I really enjoyed it. So thank you, Albert.
Thank you, sir. Thanks, everybody. See you next time.